Good morning, delegates. How are you doing today? Welcome back for day 2. Thank you so much for being with us. So, as you might remember, we talked about a lot how this session is going to go. I'll just do some quick welcome and reminders. We're going to have a 15-minute recap on what went on yesterday. Please do share your thoughts as we're doing the recap. And then we have a fantastic session for you. We have 4 speakers on investing in youth-led digital enterprises for agriculture. So we have 2 more on the grant side, 2 more from the banking side, which will be ready for your questions. Okay, so as we have a chat about what happened yesterday, it is my honor to give you a recap and to sort of manage this recap session. Who am I? My name is Aoife Hegarty. I'm originally from Ireland. I spent about a third of my career in sub-Saharan Africa, mostly in East Africa, which is one of the reasons why I'm here with you today. And I've been based in Egypt for some time. And wow, I can't even underestimate the job available. There were so many conversations going on in the room yesterday. Before we go ahead, please do take some time to make sure that you're on mute, to make sure that you have any phones out of your way. And reminder of the do's and don'ts, please keep everything polite, please keep engaging. We have, I have to tell you now, Ethiopia is in the lead with 1,200 total points from Ethiopian delegates. Ghana is right behind them with over 1,000 points. Rwanda is in third place with over 900 points. Okay. Next up, Nigeria, Kenya, and Uganda is at the moment at the bottom, but it's all to play for today. So please keep commenting, keep engaging, keep doing what you need to do to get those country totals and individual totals up. So that was a quick reminder on the leaderboard, quick reminder to keep coming at us with your comments, your thoughts, your reactions, and keep engaging. All right, so as I'm a total Sam fangirl, I will invite you in the chat to tell me where's your energy today. I think mine is at least a 9. I couldn't be more excited unless I was maybe falling off a cliff or something very much more adrenaline driven than sitting at my desk here with you all. Right, recap, day 1. Wow, okay, we had the keynote. We were talking a lot about leaders, what they need to do. Jonathan was telling us leaders need to be at least 2 steps ahead of the process problems, and that you can be a leader, you can get involved no matter where you are in the organization. It's really not about seniority and position, but more about looking at the processes and how they can be strung together to make a stronger agricultural system. So Jonathan kicked us off. Then we had Andrea talking about, making the most of the 2 days, making sure that you engage because then you will get more out of it. Olivia talked to us about partnerships and the importance of partnerships in agriculture. And then we had wonderful John saying we need to stop agriculture from being a punishment and that we need to move creativity as from being an afterthought to being policy in agriculture. And I think the vision that he gave of soil as a dynamic memory and land as a data source was exactly where we need to be in terms of digital agriculture and looking at how digital agriculture can drive the new systems forward, where we want to go with food systems in Africa. So please come at me in the chat. What were your memorable quotes? What do you remember from yesterday's keynotes and the rest of the day as we move through the sessions? What do you remember about the conversations? Please let us know in the chat. So after John, we had a few more speakers with plenty to tell us about barriers, about linguistics, about how we need to be inclusive in what we're doing in digital agriculture. Session 2, I am looking at my notes because there is quite a vast array of things that we did. Session 2, the future of work and the African food system. And we had Dr. Shakur, Dr. Winston, Dr. Samantha, and Elliot, where he's managed now to have 500,000 farmers that are attached to his app and to his platform. Now, Dr. Shakur talked, if you remember, a lot about kind of food systems as a supply chain. And I think what she was speaking around was really about master data for supply chain, for food. So we want to get data at the point where it's created at the farms and move that data right through the food system. And when we look at data and financial flows, we get a more global view of food systems as a supply chain, moving through production to processing to logistics, transport to final consumption. I think, yes, we also had that incredible statistic that only 60 out of the 2,000 languages in Africa are currently digitized. So this is one of the barriers that will need to be overcome when we're looking at how to digitize and how to be inclusive. Great, we're getting some comments in the chat. Jean says you loved, Jeanne, I should say, that we loved yesterday's session. Hope today will be as good as yesterday. We have Jean-Marc is telling me his energy is 150. Fantastic. And one thing that Sadat has said to us, one thing that was new to me, is that we need to develop these policies with the youth, for the youth. Absolutely. Absolutely. So the more that youth are involved, the more that we will get good results. And that reminds me of something else, some of the examples that John gave, that the real way to get the youth involved in agriculture lies in TikTok and Instagram and farm influencers. And potential future work might be as drone pilots or as climate smart agriculture via with AI powered. I have a quote from Maselli going, I loved what William said about making agriculture part of the main the basic school curriculum. I know there are several schools throughout East and Central Africa that have a school farm, and this needs to be not a punishment. Remember, it was about making agriculture cool again and making it not seem as a punishment, as sometimes happened when you did wrong in school and you had to go and plant things, go and dig, the teacher might tell you. Emily Osana comes with a great quote, innovation without execution is nothing. And this still rings in her mind. So session 2, the future of work. What will work look like? And I think there was a take back from one of our keynote speakers who did give some very, very good, very concrete examples of what youth employment might look like in the future, in food systems. Then as the day moved on, we went a bit to session 3, which was moderated by Gladys, and we were looking at digital agriculture innovations. And there we had 4 different examples of what's been going on. And again, we had people saying we cannot use agriculture as a punishment. We had Francis from AgroCenter, who's supplying fintech to smallholder farmers. Chamaka from AgroHive, who has a platform that enables graduate students to match with agriculture and actually set up skills for doing things in agriculture. So we need our young and smart people to be in agriculture, to be excited about agriculture and its potential. And then we had from Silo Africa, we were working on post-harvest losses. And really what came out of that session 3 for me, was to work smart and effective, and to be resourceful, and to make sure that your digital innovations are really working on the problems, and not, as we would say, digital whack, not flashy, not technology for technology's sake, but focused on real problems and real users and how they do it. Okay, we have a comment in from Frank Kagoda, who's saying the emphasis on digital apps in local dialect, both audio and text, was a key highlight. And I think where we are with AI now, this really means the ability to automatically translate text and speech into local languages. There needs to be probably some research and some effort behind that. And as a personal opinion, probably very much needs to come from Africa, because no one else is going to do it. So this is a shout out to policymakers, to anyone in government, to say we need local context, we need local dialects, and we probably need some research help around that to get it moving. A lot of the tools are already out there for other languages, and it's a question of adapting them for African languages. So did anything stand out for you from session 3, where we talked about the youth and digital agriculture and digital agriculture innovations? Let us know in the comments. And I want to just take a break here from going sort of by session to ask the delegates, tell me one thing that you learned that you didn't know yesterday, or something that truly surprised you. I think there were a few, and I think the language, the lack of support for local languages, of course, I was aware of it. I didn't really know about the numbers on it until I heard Dr. Shikoa speak. I think also this vision of the future and where jobs can go, and the need for farm influencers. That's also something I personally didn't know before I attended the conference yesterday. And I was really, really, really excited about the innovative things that are happening. Right. So we'll keep going along. I'll keep looking for comments. Okay, Chikundi says, in order to address the gender biases, there's need to provide a safe environment for women and other vulnerable groups to participate. This is very true. And from my own professional experience, a lot of it is the barrier to first use, right? When you see people who are older, people who haven't grown up with technology, or haven't been exposed as a young person, I think there's quite a lot of fear barriers that we don't tend to often address in training. So we just assume people want to use it and are happy to use it, but there may be other barriers that we're not aware of. And some tenderness, some really good training and really good awareness that it might not be as easy for some people as for others to just adopt new technologies and get on with it. That's a very good point. Anything else coming through in the chat about something that surprised you? Something that you didn't know before you went into yesterday? Yes, Maximus is also saying that the lack of local language support was shocking to him. And we've also seen that comment coming through from some of the delegates. So yeah, I think this is somewhat of an issue, right? Because you need to talk to people in the way that they need, in the language that they need. And Stuart Adekeka also says the need to integrate digital literacy trainings into schools and education programs. So I think what's coming out here is, in order to get the future of work that we don't know what it looks like yet, but we have some visions, we really need to start at the education system and some policy levels on linguistic support, on getting our children into farms early, getting the digital literacy up early, and putting themselves in a good position to drive African agriculture into the future. I believe that Africa not only can feed the world, but actually needs to feed the world in the next 2 coming generations. We have a comment from Jan going, how are we staying 2 days energized and get to know that there is a long journey to do? We are lighting the fire here, or at least starting the spark. You guys, I think when we go into community of practice and things like this, we really need to think about how to keep each other warm, how to keep each other on fire about these things. Chikondi says, one new thing I learned is on digital agronomy. And we have a lot of participants saying, yes, digital literacy is key. So yes, to wrap up, we then had session 4, which was about barriers to youth employment. And one of those barriers is financing, which we're just about to talk about. But there are quite a lot of things that we need to go over on the policy level, on the training level, on the access level, and getting youth enthusiastic about agriculture. And session 5, where you also had me, we had these wonderful pitches from our entrepreneurs. Did you learn anything from the entrepreneurs? I'm sure everybody thought that session was a little too short because there were so many questions coming in. But there are fantastic things happening in digital agriculture, and it's time to get on board and start supporting them. I'm just looking through the comments. Okay. And then as we wrapped up on day 5, it was really about, there are things going on. We saw stuff in fintech for the dairy sector. We saw smallholder farmer support systems. We saw the Soko Kijiji looking at small traders, so looking at how the provision of food or the trading of food is going on. And we're also looking at how digital innovations can help both local and export markets. All right, we're going to see if there's any last comments. Okay, Hanuk tells us rural and youth farmers are using Facebook and TikTok and other social media, but support should be out there for making data access interactive and easy to integrate. All right, thank you so much for the comments. I hope that's been a useful recap of day 1 as we go into day 2. We're now going to move over to my panel session, which is all around financing for youth-led digital agriculture enterprises. So let's switch over and have a chat to our panel. All right, today with us in the room, we have Daniel Munyakambi from Absa Bank. We have Esther Mwangi from Acumen. We have Gerald David from Global Resilience Partnership, and we have Jeffrey Namau from Asali Bank. So take it away, Daniel. Give us a quick introduction.
Thank you very much, and good morning, delegates from wherever you are reaching us from. My name is Daniel Munyambo, part of the Absa Agribusiness team, serving as a country agribusiness specialist, and really looking forward to the conversation today. Thank you.
Thanks, Daniel. From Daniel, we'll go to Gerald. Take it away, Gerald.
Thanks, Aifa, and thanks a lot for inviting me to be here. My name is Gerald David. I am an innovation lead with Global Resilience Partnership. I'm quite excited to be here and to hear a lot more about the youth innovation in agriculture. And yeah, looking forward to the conversation. Thanks.
Thanks, Gerald. Okay, Esther, you want to introduce yourself?
Good morning, everyone. My name is Esther Mwangi. I'm from the Acumen Resilience Agriculture Fund, a $58 million fund investing in agribusinesses across East and West Africa. It's a pleasure to meet you all.
Thanks, Esther. Okay, Jeffrey, over to you.
Thank you so much. Yeah, Jeffrey Nyamao is my name, from Aseli Africa. I serve as the country manager for Aseli Africa in Kenya, where we catalyze financing to agriculture. We've partnered with about 49 lenders across the 5 African countries to ensure that agribusinesses are adequately financed. Looking forward to this engagement. Thank you.
All right. Okay, before I put the baton back to Jeffrey, he's going to answer our first question. But just a quick reminder to all the delegates, please put your questions in the chat. We're going to have time for a Q&A with all of our speakers once we're done with this section. So get your thinking caps on. Any questions come to mind? Let's hear them. This is your chance as leaders to talk to finances and investors. All right, let's stay with Jeffrey. So question 1, which types of financing have been most effective in enabling early stage youth-led digital agriculture ventures, and why have they been effective?
Thank you. Thank you so much for that question, Aifa. Yeah, so in terms of financing, digitally for youth-led, enterprises, and so it's one thing for the financing to be done, but it has to be sustainable. So we'll be keen to look at the sustainability to be able to support digital agri enterprises. The first financing that we've seen that has really been helpful for agri businesses is their grants. Those grants that come from different entities. And one of the things that ACELI does is we also involved in that. We give particular grants to youth-led, enterprises, so that ultimately that mitigates the risk of you being required to pay up that particular facility, and that helps you to, do the tests and all that, and ultimately learn the ropes even as you scale up your digital investment. So that is one of the financing options that is really, really important, because then it puts you in a very good place to be able to scale up your investment. Now, the other financing, option that is available that, would support enterprises would be angel investment. I know we have local and, international investors that would be interested in supporting youth, led digital enterprises, agricultural enterprises. So what we are looking at, there's a lot of flexibility that comes with that. And what we've seen is we've also seen, angel investors that are focused on financing youth-led enterprises. There's a lot of, financing that is happening towards that, and just closely tied to the recap that Aifa gave, earlier on, that we want to make agriculture cool. So how do we make it cool? Is to ensure that there is financing that is directed in that direction from the financiers. There's a lot of flexibility that comes, with that particular financing, so that ultimately you're able to scale up your investment. It also gives some elements of hands-on mentorship. So it is one thing for the financing to come through, but then there's ecosystem support around mentorship, coaching, so that ultimately that enterprise is able to scale up and grow, from one level to the other. Another financing, option that we've seen that would support agricultural tech-led, enterprises, digital enterprises, would be revenue-based financing. I've been in banking for a number of years, so it is one thing for you to get financing, but it's another thing to ensure that that financing actually supports your business to be able to scale. Now, how does that happen? Is to look at your digital enterprise and ask the question, how are the revenues, how is it structured in terms of revenue? Are you anticipating revenue, in 3 months, in 6 months, in 1 year? So that then the repayments are structured, as such, so that then it doesn't, affect your enterprise, altogether. Of course, it also reduces the perceived and real risks that relate to agricultural lending. And that is the conversation that we are having today, to make it cool and, you're able to scale, over time. Another financing, investment that we've seen are seed funds. There are particular seed funds that, are available in the market that relates to financing. And I know Acumen will be speaking to these about their resilient, financing, program, where at the end of the day, this is targeted to digital-led enterprises, so that ultimately, once you get that particular, seed financing, then you're able to scale and grow, your business. Of course, there are small ticket sizes, that helps you to ensure that, yes, as you're venturing into this, then it doesn't expose you, altogether, as you look at that. Then there's sector expertise that, comes in such a way that you have, businesses or entities that have been involved in this space, and also organizations that have supported, digital agricultural enterprises in such a way that they work with you, so that ultimately, yes, as you've received this seed, capital, that they'll give you some good grace period in terms of if it is 2 years, 3 years, so that once the business has built, adequate profile, cash flows have been generated from that particular business, then at that given point is when you will be required, say, to pay that particular, facility that has been granted to you. So all these options are available, but the most important thing for them to be sustainable, the ecosystem has to support it. There has to be some capacity building and technical assistance that goes into that, and that is one of the things that ASELI does really well for youth, led enterprises, so that ultimately you're guaranteed to scale and grow your enterprise over time. Thank you so much, Aifan.
Thanks, Jeffrey. So if I got you correctly, we talked about grants, we talked about business angels, we talked about bank loans, we also talked about revenue-based bank loans, which is particularly useful for agriculture because it's not regular income like you would be selling a product or service. And lastly, sort of seed fund facilities. Did I get all of the ones correctly?
Absolutely. You got it right. Yes. Tom.
I'm going to ask you a quick add-on, which is, what do you think we're doing currently well on? And which of those ones that you've mentioned do we need to maybe beef up on?
Thank you. Thank you so much. Yeah. So one of the things, of course, in terms of financing, there's quite a bit of, financing that goes into this, but it is not enough. I mean, that is one thing that I have to confess that is not enough. So what I would recommend, strongly, is to introduce and have much more grant funding, in such a way that you're able to support these enterprises. Of course, they don't have the experience, in running these particular businesses. They are venturing into this. They have seen an opportunity. They've seen a gap in the market that they need to address. So the most important thing would be, let's have much more grant, funding that goes into this particular sector, particularly the youth digital agricultural sector, so that ultimately they're able to scale. That is an area that I feel much more can be done, and definitely if we can have more angel investment coming through from the diaspora locally. We have quite a number that have come up and they're supporting this. It would really make a big difference around scaling these enterprises to the next level. Thank you, Naifan.
Fantastic. Thank you, Jeffrey. So yes, more grant financing. I've certainly seen that. I've also worked in business angels, so I know that that's could be better. I know that many wealthy Africans like to make investments outside of the continent, but if they can drive some wealth into business angeling, this will also help youth-led enterprises. Thank you so much, Jeffrey. And you ended on a note talking about more grants. We didn't plan this, but it's a wonderful dovetail into, let's talk to Esther from Acumen. So Esther, what I'd like to know from you is, how can blended finance and risk sharing models incentivize investors in youth-driven solutions, right? So granting and business angeling is one way to get the risk out. Let us know your thoughts.
Thank you so much, Aoife. And I think it's great that I came up to Jeffrey, because I will echo a lot of what he said. So just as a recap, blended finance is when you use catalytic capital from public or philanthropic sources to increase or catalyze private sector investment. So private investors have a fiduciary duty. They need to offer attractive returns, diversify their investments, and also contribute to sustainability goals. However, especially in this developing side of the world, the risk associated with those investments is a lot higher than the expected returns, or at least it is perceived to be. So, including this blended finance that de-risks some of these investments may catalyze the private investor money into fields such as agriculture and youth-led enterprises, especially those focusing on innovation. So, the structures that we see today on this blended finance could be the likes of guarantees, grants, technical assistance, or even concessional debt and equity, and junior forms of capital like debt and equity. So when it comes to direct investments into these youth-led enterprises, what Geoffrey spoke of, that is the grants or technical assistance, or even concessional debt, that is debt that is at a lower interest rate, or debt that is denominated in local currency. We are not giving USD loans because that just becomes more expensive because of the instability of our own local currencies, then that could be very helpful. However, there could be blended finance options that are dovetailed into existing financial infrastructures. Things like guarantee funds. So when you approach a bank like ABSA and you apply for a loan, ABSA has a guarantee fund that is backed by a DFI or another multilateral institution, such that it de-risks the risk that ABSA faces when they invest directly into these youth-led enterprises. That means they will be more willing to invest in these companies than they would otherwise be without the guarantee funds. The other thing will be when you look at funds like ARAF, we have junior capital, people who take first loss. First loss means that if we lose any money, they take the hit first before senior lenders do, or senior investors. So that catalyzes investments in areas such as agriculture that are usually seen as high risk and low returns. So those are the structures I would recommend, or I would think of as blended finance solutions that could be targeting youth-led enterprises, particularly in agriculture in sub-Saharan Africa.
Perfect. Thanks, Esther. Little follow-up for you. What have you seen as a good example of de-risking? If you have something in digital agriculture, great, to the top of your mind. If not, just any example of de-risking.
Yeah, I think I have seen agricultural companies getting guarantee funding from financial institutions to on-lend to farmers, and especially vulnerable groups like female farmers or other vulnerable groups. And basically, these financial institutions tell the company that if you suffer a loss up to 75% of the amount that you have lent out, we will cover it. So these companies are more incentivized to give capital to these farmers, and therefore those farmers can grow faster and become better farmers, especially in light of climate change and all the other obstacles they face. So that is one great example that I have seen. Others will be the grant funding, technical assistance. This is also provided by funds. So they provide you with technical assistance, which is like grant funding that is non-dilutive to your company, so that you can get the specialists, the consultants, the expert knowledge that you require for you to scale up faster as a company or as an entrepreneur.
Perfect. This is a great example. And I think a lot of what we spoke about on day one was around systemic approaches and really looking at the barriers in a systemic way. And I think that's a fantastic example. So really de-risking agricultural investments for financial and for commercial banking has a really awesome knock-on effect on all of the system. Thank you so much, Esther. Right, now let's have a few words from Daniel. Tell me, what are the key elements that are missing from the current funding strategies, especially the ones targeting youth entrepreneurship in agriculture? What have you seen? Okay, it looks like we're having a little bit of technical problems getting hold of Daniel there. We'll give it one more try. How's it going, Daniel? Can we hear you? So possibly a problem with the headphones. Let me skip over you for now, Daniel. We're going to try it in a little. We'll get back to Daniel in a moment. For now, I'll bring up Gerald. So Gerald, wanted to talk to you about the kind of support, kind of ecosystem support beyond funding. So we've talked a lot about how funding can help. What are the kinds of ecosystem support that have made the biggest difference in success or failure to scale? Because I think you've seen quite a lot of innovations and where they've gone to in GRP.
Thanks a lot, Aoife. That's a very good question. And I think, as my colleague have mentioned before me, grant funding is quite very important. But I'll say, because funding alone rarely moves the needle without the right scaffolding. So in this case, in GRP, we have a number of kind of supports that accompany grants funding to digital youth innovators that helps them scale, but also sustain their businesses. There's about 5 of them, and I'll just go through them very quickly. So we do have something called what we call tailored mentorship and advisor support. So this is a one-on-one support that provide customized mentoring program that helps innovators, refine their business models, clarify their value propositions, and prepare for investor engagement. So this kind of support helps actually youth realize the value within their business ideas, within their innovations, and also be able to lead to take them forward to the next level of investment, but also scaling. We do also offer what we call the Leadership Academy, and I'm happy to say that IFA has been one of our great champions of that Leadership Academy within GRP, whereby we provide what we call we provide the candidate we work with, the business we work with, the leadership support, strengthening their capacity to lead through complexity, navigate uncertainty, and build resilient skills that are essential for scaling. And I think for the past 3 years, I'll just give an example. We've done this for over 60 organizations and businesses across East Africa, whereby they have gained intensive leadership skills through a leadership training that has been offered through one of our programs called the Resilience Agriculture Innovation for Nature. There are also sort of like strategic communication support, whereby businesses can receive this support to refine the messaging and storytelling, which is quite very important in the innovation. And this is crucial for attracting partners and funders, but also customers. How do you get your story out there? How do you get your idea out there? This often includes pitching coaching. Sometimes these businesses are involved in a pitching session in the different platforms, and also visibility through a GRP networks. As I mentioned, GRP has over 80 partners working across the world, and this helps these businesses, innovators, and these youths to be able to actually showcase the idea and be visible to a different number of partners, but also stakeholders across the globe. There's also what we call the investor and partner linkages, and basically for us we call the investor forum, whereby the businesses or the youth digital innovators are connected with potential funders and investors through forums and pitching sessions. These are curated introduction and help bridge the gap of innovation and investment. There's a number of these forums whereby these ideas have been showcased and have resulted in a more sort of increased investment, but also scaling in the different, for instance, the climate weeks that are happening across the globe, African Climate Week, New York Climate Week, London Climate Week, where we've had a number of investor forums and invited these businesses and these youth to come and pitch their ideas, come and meet one-on-one with investors and funders that are available, networking, but also provided direct linkages to these innovators to be able to scale the business idea, but also attract more funding, which is quite very important. As I'll say, some of our programs provide only early stage financing or the de-risking part of that, and then make them able now to go to the likes of ABSA to be able to access the additional financing. The other part I would say is actually the platform for visibility, and validation. So being part of a recognized challenge, for instance, as I've mentioned, the Resilience Agriculture Innovation for Nature has been operating in East Africa for the past 3 years and have worked with over 80 businesses in East Africa. So this helped these innovators, gain credibility and exposure, which can open doors, for partnership, policy influence, and further funding. So these are quite kind of other support that can be given to actually accompany the grant funding to be able to make sure that these innovators actually achieve scale, achieve sustainability, and are able to continue to do their business, but also influence the ecosystem. We've often seen quite a lot of demand for this kind of services, including the grant funding at early stage within East Africa itself. And in the just last 3 years, we've been able to receive over 1,500 applications for grant funding, but also this kind of tailored support that I've mentioned to be able to help these innovators to actually scale and sustain their businesses.
Great, thanks, Gerald. So if I've gotten everything correctly, with mentorship, supplying some technical assistance, making sure that the pitches and everything else is correct for these companies when they go to look at the next stage of funding. So whether you're a grant provider, whether you're a loan provider, whether you're financing, if you're taking a bet by granting, loaning, financing a company, make sure that they have the next step. Make sure that they're capable of talking about themselves to the next step funder, that they have access to the next step funder, that you give them a platform to do so. And I think GRP is a great example. If you build it, they will come. I think we had, I don't know how many applications, maybe 100 for the first challenge, and we're now over 1,000 for the next challenge. Is that right, Gerald?
Yeah. That's right. So we started with about 140 applications for the first round. In the third round, we grew for about 1,000 applications. And, the ecosystem is still not saturated, to be honest, and the demand is quite very high.
Thank you, Gerald. Yeah, let's go back and hopefully we can talk to Daniel. I've got to say, I was really surprised at the upswing. It's like there was so much more agriculture innovation out there than I expected, than we expected. And all you did was simply show up year after year and offer funding. I'm sure Acumen can say similar stories. Daniel, are you back with us? Can we speak?
Hopefully you can hear me. Let me know if you can't, then I can change my connectivities.
Yes, we can. Alhamdulillah. Okay. Daniel, tell us. Tell us.
Yeah, my apologies. Technology was about to let me down, but I really want to associate. I want to associate myself with the comments made by the panelists ahead of me, and of course, it's tough to speak after they've spoken. The beauty is that they are on the catalytic side of business, and it's also an easier conversation for them. For me, who holds a sort of a commercial banking license and supporting youth in agriculture requires twice the innovation and twice the thinking to be able to be relevant and present. If the data available, especially for the Kenyan market and the East African market, is anything to go by in terms of the value of financial inclusions that goes into the Greek space. So it's twice the effort, but over the years we've come to appreciate four things that influence the decisions that we make as commercial banks, and some of them have been elucidated earlier by my colleagues here. And I'll just quickly summarize them. The first one is access to information, and information here is what we call credible, usable, and one that can be used for decision making. And this has to do a lot with how we store the data that we get, how we process it, and how we communicate it. We have a word in the banking industry that says, well, cash is king, data is a new queen. If you cannot have the right data, then it's always a challenge for us to be able to support you. And that's a pillar that we hold dear in ensuring that we get the best information and then disseminate it to our players in that space. The other one is access to markets. After you've done all your work, you have to have a revenue model that operates at the end of the day. None of the players there will be looking to do it for charity more so, but to be able to generate positive EBITDA that are able to meet their financial obligations and also have some pockets well lined up. And that conversation about access to market is one that we continuously drive together. The other one, and had been mentioned earlier, especially when you're looking at startup nature business, and even the more established one, on those that want to integrate either vertically or horizontally, is an element of coaching and mentorship. Coaching in knowing where the pitfalls could be, and mentorship knowing that people have gone through this route and they've been able to do. And even where we're looking at the innovative bit of it is to ask ourselves, how can we support in that space? Finally, if we're able to solve for those three things, then we can come to what our commercial license speaks about, which is access to sustainable finance. And here, increasingly, the challenges are known. One, financial institutions are not known to support cash flow based lending as much as that's directionally where we're moving the industry to go to. It's still heavily on collateral based lending. And when you look at youth and innovation space, that collateral is not something that will be forthcoming. Then the model that commercial banks tend to look, especially when they are looking at financing, is where there's a proven business model, usually 3 years, with 2 of them being positive EBITDA years. But then we have to go beyond that. How do you lend through ideas that are coming through? And cumulatively, as I shall mention towards the end, that's the direction that we are going. Policy framework is an area that also needs some work, especially when you look at youth and innovation. Typically, in these jurisdictions, the legal framework tends to follow the innovations that have happened. I want to give the example of M-Pesa. M-Pesa had to develop, and then the legal framework then comes to play. Even in our space, that's what we are seeing, especially with the innovation space, and trying to support the youth businesses. That some areas within our regulatory framework is not quite supportive, but the good thing is that we are continuously investing in research and development that allows us to test and learn on those platforms. So when we're able to do that, we feel that we can provide some sustainable financing that is not predatory, financing that ensures that the business succeed beyond their that adversary, and they're able to do business that transcends generations. But to be able to do that, we cannot do it on our own. We are continuously looking for partnerships and collaborations to work with. And we are strongly convicted, and for me, who is in the agribusiness space, that the best culture is agriculture. And the reason we say this is, if Abraham Maslow was asked about the basic needs, and the first thing he said was food, and then he went to the other things, clothing and shelter. The one space that we need to continue participating in, to continue innovating in, to continue working with closely is the agriculture space. And for us to empower Africans together, and it's tomorrow, one story at a time, is through a collaborative conversation that involves not only the commercial banks, the investors, the de-risking instruments, but every participant in the value chain. So that's my take, Eva.
Couple of hot takes there from Daniel, who was going over a little bit of what's missing beyond financing. So let me try to recap. You mentioned that legal frameworks, most often they should lag behind innovation, otherwise they will drag innovation down, so that in some cases, perhaps the legal frameworks are not helpful towards agriculture innovation. You've also mentioned the need for cash flow-based lending, or a move to cash flow-based lending. And also, I love it, commercial banks, you can always count on the banking sector to be the Lord High bringer of the reality check. Those of us who work in innovation, it's about heart, it's about going ahead, it's about innovation. And then our brothers in banking come in with the head and tell us how much it cannot be done, how cannot be financed at a given level of risk. So there's a need to... Yeah, go ahead. Sorry, Brandon.
No, as you build the aeroplanes, we always remind you that you need the parachutes in there.
By the way. So I think both are needed. We need our heart to get us moving, and we need the head to make sure we're not burning through cash and not getting the results that we need. And this is why we talk about de-risking and grants and other types of financing, which come in order to de-risk the business so that the financial sector, the banking sector can take over and do what they're supposed to do, which is manage risk. Thank you, all the panelists. Now I'm going to have one more question that any of you and all of you can chip in on before we turn it over to our delegates. Delegates, please get your questions in. So how can we assess whether investments in youth-led digital agriculture venues are really leading to sustainable employment outcomes? So I'm just going to go around the table and give me a couple of things. How are you doing metrics? We'll go back to you, Daniel.
Please take that question again. I think I tended to read a comment on the chat.
Yes, I get distracted as well. Multimodal. How can we assess whether the investments that we're making in youth-led digital agriculture ventures are actually leading to meaningful employment? So it's a question on the link between the investments we're making in, a flashy app and actually jobs on the ground.
Yeah, and that's a good point. And for us in the financial industries, numbers are key. They tell the truth and they speak the absolute truth. And we're able to link between the app and the revenues that is able to generate. For every shilling that they're able to generate, we're able to then see which pockets do they sort of end up with. The ecosystem conversation that Geoffrey was mentioning, how is that flow of funds? And especially in developed monetized systems, you're able to follow every shilling to where it is going, and by extension you're able to tell from that flow of funds who is getting to benefit from it, from an employment perspective, from a livelihood perspective, and from a sustainability perspective, by just following where the funds are going.
Follow the money. Okay, this is how the commercial banks are doing it. Gerald, give us a quick hint on how GRP are doing this.
Yeah, Aoife, thanks. And I think from the GRP perspective, I think we're looking into a number of things that ensure that this actually is a success. So I think mostly looking into business sustainability and scalability, whether that is happening down in there and down the road, following up with these businesses to ensure that this is happening. So in the case of these digital kind of innovations, looking into what is the rate of adoption of digital tools, and this particularly looking by the farmers and agribusinesses and so forth, and also looking things about are they resilient to shocks, the climate, the market disruption, and something around that, and also looking into the revenue growth. So we tend to see how does actually this lead to sustainable employment in the youth sector, but also what is the income quality? That's how are they able to move from sort of one level of income to an next level of income, and this speaks about the income stability. Are youth earning consistent or livable wages and something like that? Is there something about say security within it, and also things like skills alignment and so forth? So it's just in short, we're looking into things like that, but in a more general, we're looking at what we call the ecosystem integration, whereby now you have multiple players can really come together and actually provide this kind of support. I would call something like crowding. There's access to finance, the mentorship and platforms are there to support the youth into that. But also there's a partnership with cooperative governments and NGOs in such kind of that. And also, lastly but not least, I think it's something have to do with the participation in the policy dialogues or innovation networks for this to be able to make sure that it's actually reverberating out there to the right people and the right decision makers that are actually able to see this and actually take forward.
Right. So it's a multi-pronged approach to understanding how your digital innovations are leading to employment. All right, Esther, we'll give you the same question.
Thank you so much. Our approach is the same as what the other speakers have spoken about. We do track employment numbers, and beyond employment numbers, we dissect them in different ways. Basically, senior management, and then junior staff, part-time and full-time, split by gender, everything, so that we can track the evolution of that over time in each company and in each enterprise. We also look at the number of farmers that are engaged. How are their incomes increasing as a result of engaging with this company? Is it increasing because they have added land, or is it increasing because they're using the same amount of land but have achieved higher levels of productivity and yields? So that is a better metric than just increasing because you increase the land under cultivation. So it helps us see the quality that farmers are receiving and that employees are receiving. And of course, there are other things that track the quality of employment, like ESG metrics. How are the HR policies? How are health and safety policies looking like in that company? What is the accident incident rate, etc.? So it's not just about employing people, it's making sure that they are safe and their employment actually adds value.
Thanks, Esther. And all right, finally, back to the where we started with Jeffrey. Let us know what you're doing in SLE.
Yeah, thank you so much, Rifa, once again. I mean, my colleagues were very, very spot on around, how you assess the impact. So when you're looking at meaningful and sustainable, employment that relates to agriculture, you have to look at, of course, the quantitative and the qualitative aspects. Of course, as ASELI Africa, we are data driven, so we are very keen on the quantitative aspects. So in terms of what are the numbers of jobs that have been created, from these particular enterprise. So not only that, we also look at the indirect jobs, what are the other players, farmers, and what are the other, players in the value chain that have benefited from this particular platform that has been put in place. So we are really keen to look at that in terms of growth rate over time. So how is the progress, over time? Then we're also looking at the quality of the employment that has been created. So when you're looking at the quality, we are also keen to look at the stability of those particular, jobs that have been created. At the same time, we look at, what is the growth rate of that particular enterprise, over time. At the same time, as you look at the growth rate of that enterprise over time, you have to look at the income that is realized vis-a-vis the industry. How is that, happening? Then we look at the actual, metrics around the youth. How many youth have been employed within, the age, bracket that is there, which is really, really important. And also in terms of skills development, over time, we also keen to look at that and how that is progressing, and also aspects around inclusivity, around gender, women, that have been involved in that particular business. So we are keen to look at all those aspects to guarantee sustainability into the future. Thank you.
All right. Yeah. Thanks, Jeffrey. Okay. Thank you so much to the panelists for answering my questions. Now, let's take it over. Please, delegates, keep your questions coming in. We've got quite a few already. Okay. So I think I'm going to start with David Wasiwa's question. This is more to the banking sector folks, but let's see who wants to chime in. So how do we structure the de-risking processes to be reflected in the interest rates that agribusiness entrepreneurs finally have to pay? I'm worried that the high interest rates and lack of collateral security are big barriers to access finance by all agro SMEs. I think Daniel or Jeffrey, would you like to take this one? High interest rates, that's you guys, the banks, for sure.
Yeah, maybe Geoffrey is looking at me to take it up, and that's quite a correct observation. Apart from availability of credit, the pricing of it is a big hindrance into its access, and the question there partly answers it, because the Kenyan market experience is that we're on what we call risk-based pricing. Is that we have a base, usually based on the cost of funds, driven by where the government is borrowing, and then the financial institution would add a margin depending on the risk profile of the individual borrower. Now, when you have a borrower that does not have collateral, means from a banking perspective, the risk is considered to be a little bit higher and hence a higher margin. Now, with a de-risking tool, it comes to take away that risk from the commercial bank, meaning that that benefit can be passed on from an interest rate perspective, and that's why continuously we always looking for these partners. And I can mention one of them that we work with as ABSA called AGF, Africa Guarantee Fund, and for cases that would be borderline because of lack of securities, with AGF we are able to grant them access to that facility and at a lower rate. That's one way of getting it across the line. The other way is with funders and who can do an interest rate rebate, and I've seen us work on similar models in the past, where the bank is willing to charge X plus 2. The partner comes and says, I'll take the 2, you just charge X. That means that then that benefit is passed to an agri SME to benefit on a lower rate. So the models do exist, but continuously we are in the market looking for partners that we can work with. Thirdly, and more importantly, is a cost that commercial banks incur in distributing financial services. Let me explain. If you're going to disperse a loan of a certain value through brick and mortar branch, the cost of delivery is far much higher than if you're going to deliver it through technology. And that is why this conversation is important to us, because the costs are far much reduced and the benefit is possible to pass from an interest rate perspective and also from a tenor perspective. And two, the likes of Aseli give us incentives, institutional incentives, which reduces our cost of operation from a commercial bank perspective, meaning that benefit can now be passed on to the end borrower in terms of either reduced interest rates or reduced origination fees. But allowing Geoffrey to chime into that, I know he operates in that space quite well.
Thanks, Daniel. Yeah, fantastic.
Thank you so much for that response, Daniel. Yeah, so one of the things that we've done in terms of the incentives that we give, we normally give some guarantee mechanism to the commercial banks in such a way that they are able to mitigate the risk that relates to agricultural lending. So what we've seen for the lending institutions that we've partnered with, because of the risk that is mitigated, they've factored that when it comes to the pricing of the facilities that they are granting to the SMEs. So because of that particular benefit that is being passed to the SMEs, then we are seeing the price of the facilities, coming down gradually. That is number one. Number two, because of the risk that is significantly mitigated, we are also seeing flexibility around collateral requirements that is being extended to the SMEs from the lending and the banks that we are currently working with. That's another one. Then the other one is we are also seeing flexibility and having even unsecured lending relating to youth owned and led enterprises also coming on board. So we are seeing actually, based on the de-risking mechanisms that are available to the financial institutions, ultimately that benefit is being passed to the SMEs, which ultimately contributes to much more capital deployed to agri enterprises, particularly that are youth. Thank you.
Thanks. Yes, I think the problems of high interest rates are well acknowledged within the banking sector, and there are some very interesting and creative instruments that have started to come into various countries to mitigate this. I'm going to move now and pose this next question to Gerald and Esther. It's a fantastic question from Olivia. How do we ensure that grants are used for the purposes intended? Gerald.
Yes, so how do we ensure that these grants are used for the purpose that are intended? So there's quite a number of mechanisms that we deploy to ensure that actually grants are actually deployed to the intended goals, and this includes, continuing mentorship and coaching even beyond funding. So with GRP, for instance, we provide coaching and mentorship before an enterprise receives funding, but also post-funding. This process continues on engagement of one-on-one between an entrepreneur or SME with the mentors. This ensures there's actually a regular checking, a regular follow-up, a regular meeting to check the progress of the project, but also to ensure that it's continued to align with what it was intended to do, but also doesn't deviate from that. Or that is one part of that. But also speaking from the perspective of early stage financing, I would say that's quite very complex in terms of cost-wise for following up to make sure that these are intended. But we require sometimes regular reporting from these entrepreneurs. And as I've mentioned, it's quite a very small funding, so you cannot burden some entrepreneurs with so much reporting. So you simplify it in a way that it gives you confidence in what is being implemented in the field. Coupled with some site visits, deploying a grant, but also going to the ground to be able to see, meet the entrepreneur themselves, but also go beyond meeting the entrepreneurs, also visiting the beneficiaries to make sure that they actually see the value in what the investment has been made to that particular enterprise. And this is quite very helpful because oftentimes we actually forget that the link between the investment and the fund of the beneficiary, which are smallholder farmers in that case, but also without forgetting that these enterprises also need to grow. They need to finance some part of the systems, to be able to better perform the duty, but also de-risk themselves, as I think my previous colleagues have said. This is actually preparing them to be able to move to the next level of funding. So I think those quite two kind of a mechanism help us to ensure that there's an alignment between what we've invested for, but also in what the enterprise is doing on the ground. And any changes that is observed, any deviation that is observed is immediately redressed in terms of making sure that the entrepreneur, but also ourselves as the funders are in the same page and are also able to monitor that going forward. Yeah, thank you.
All right. So in short, trust but check. So maintain the relationship and potentially do a site visit. Esther, what happens in Acumen? How do you balance this?
Yeah, I think the only thing I would add, and this is from an area of perspective, while we provide commercial equity funding, we do provide technical assistance funding that is structured as a grant. But what we do is that we do it on a reimbursement basis. So basically, the company would go on, implement the project, get whatever it is that they wanted to get out of it. And then they would report on what has been done and what benefits have accrued to the company, how much has been spent, invoices and everything. And then we would reimburse them the cost that they incurred. So in this case, then you make sure that the company actually does what it said it will do, and you're not giving them money up front to do whatever they want. From an external perspective, I think I have seen other institutions providing milestone-based grants. So basically, they give you grants once you achieve certain milestones. So if the company intended to create employment or, impact the youth or the women, then once you achieve those milestones, then you unlock more grant capital. So there is an investment. There's an incentive, there's a carrot for the company to do that which it's intended to do. So that's all I would add.
Yeah, thanks. The milestone-based funding is a useful tool indeed. I would suggest if anybody is thinking of implementing milestone-based funding, just be aware of the level of innovation. If you're at a very early stage and there's a very high level of innovation, make sure that you're carroting them with what you want to happen and not the way that you want it to happen. Because with innovation, there's quite a lot of failures and pivots and things along the way. That's, of course, Gerald and Esther know this well, and probably the banking guys do too. That was just a note for our audience if they're involved in structuring any of these. All right, I'm going to take Chikundi's question now. And I think this is more for the banking sector chaps. Are the guarantees funds openly available to all enterprises, or do they get tied to a particular project which the financier has gone into agreement with? Just a note for our delegates, if your question is directed to a particular one of our panelists, please let us know in the question. But I'll open this to Daniel and Jeffrey. And Esther, if you have any thoughts, let me know. Just chime in.
Thanks. Maybe I'll take the first bite at that cherry. And the sort of guarantee funds that we've negotiated for are not value chain specific and are not project specific. We try as much as possible to get broad brushed approaches that give us flexibility. Of course, yes, they do come with some conditionalities. Sometimes they do not speak to exactly what we do. And I'll give an example. They will put a condition like the business needs to be registered for it to qualify for fund. Now, for the Kenyan market, for you to be a farmer, you don't require any license, and that sort of excludes some sort of good population which we are targeting to. But then we have other funds, guarantee funds that are at portfolio level and are able to look at a specific area. So specifically to that question, we have a mixture of both. What we also do is we ensure that we have flexibility and multiple guarantees available. So if one doesn't work for customer X, then we can place them on a different guarantee, only to ensure that no single client is sort of double insured. But the simple question is, we try as much as possible to avoid the ones that are specific or value chain driven.
Okay, yeah, thank you, Daniel. Anyone else with other inputs to that question?
Maybe I could chime in just a little.
Thanks, Jeffrey.
Yeah, so when it comes to the particular, guarantee that we give, as a CELI, for us, we are very specific around the sector. So we look at you should be within the agribusiness sector and the entire value chain, in agriculture. And so when it comes to youth and women, definitely our incentives in terms of guarantee are more, and also the grants that we give, they're actually higher compared to the other SMEs. So we are quite specific around where and whether you're in agribusiness and agriculture, value chain. So that's our focus area, and that benefit goes to those players within that value chain. Thank you.
All right, thank you. Well, yes, I hope that that answers that question a little bit. I think I'm going to move over. There was a question on, I can't find the actual delegate, but the question was on whether funding for vulnerable groups also included youth. So whether you're a grant funder, whether you're providing matching financing, whether you're providing loans, do you have specific youth schemes, youth and entrepreneurship schemes? So I'll just do a quick round the table, starting with Jeffrey.
Absolutely. Thank you so much, Eva. Yeah, actually we do. Ours is when it comes to our grants that we give, we have targeted grants for the youth specifically, and the margins and the percentages are higher compared to the others. Then we also, when it comes to the incentives as well, guarantee, we have funds that are ring-fenced to particularly to the youth. So we actually do that in terms of our offering. Thank you.
All right. Okay, Esther?
No, we do not have any grants that are earmarked for youth. Ours is just commercial agribusinesses and climate resilience. So there's nothing that specifically points to the youth. Okay.
Thanks, Daniel.
Yeah, because at the end of the day, the transmission tends to happen through the commercial banking spaces. We do have bespoke guarantees available for women in business, in youth, people living with disabilities, and also specific special groups that we have within the banking space. And wherever we are deficient, we always looking out in the market for partners to work with along those areas.
Okay. And finally, Gerald, does the funding for vulnerable groups consider youth-led enterprises? Let us know.
Yes, so within GRP we do have that, and as an example, I think on the RAIN 2 we specifically mentioned that we're looking for entrepreneurs that are youth-led, youth-owned, or youth-focused, but also women. It's a special group, but I think moving forward, I think it's a bit of a requirement. Like 50% of the funding need to go to that. So it is done consciously to target this kind of group in the society, and I think we've seen quite a number of youth and women that are actually applying for this kind of funding. And within our cohort, I think we do have quite a number of youth and women that are accessing the funding, but also other services that I've mentioned earlier in my presentation. Thanks.
Thanks, Gerald. And thanks you, Patricia. It was Patricia for that question. And actually, I've got another one specifically for Gerald, so we'll stay with you. Gerald, this is a question from Shikondu. To what extent have the businesses that have been supported through these different ecosystem support, the mentoring, the getting investment, the investor forums, and all of that we had mentioned, to what extent did they manage to access finance and sustain their business operations? So it's a bit of a question of what happens after the grant and mentoring period.
Yeah, thanks. That's a very good question, and I think speaks about taking this actually forward and scale and something like that. So within our portfolio of innovation and how we work with this, we do have what we call the funnel of innovation, whereby an entrepreneur moves from one stage to another. So we have early stage investments, seed stage investments, scale stage investment, but also amplify stage investment. So for entrepreneur to be considered, success and moving forward, has to actually graduate from one stage of innovation to another. And I think I'll just give an example of Resilient Agriculture Innovation for Nature, which has been here for 3 years. This is the third cohort now. Was launched sometimes in actually Egypt, sometimes in 2022. We've seen some entrepreneurs from cohort 1 graduated to another level of innovation, and this is a testament that the kind of early stage grant financing, but also added on support services that are given is actually working. But to what level, you can definitely say out of 10 that have started in the early stage, you could expect not more than 3 or 4 to be able to move forward to another scale and graduate. But also, how many of these has been able to access external financing? So through a different kind of services like investor forum and linkages that we are doing, some of them are able actually to be de-risked to a point that they can actually approach Daniel at ABSA and be able to tick some of the boxes that they require for them to be able to be granted commercial loan. And the idea is actually to make them investor ready. So part of the support we give is actually investment readiness, and also linkages, we call them investment facilitation, whereby we handhold them to approach a certain financial institution or funder or investor and take them through the process of them be able to access this external financing. And we've seen that happen with a number of businesses in Kenya that we supported, some of them in Tanzania, we're working, and also we're working in the ODA, official development assistance eligible countries, both in the Asia, in the South America, but also here in Africa. But a vivid example is actually available here in Africa, whereby we've had these businesses move from one stage to another. And actually that is what we're aiming for. And I would say the same. So thank you.
Thanks, Gerald. I'm going to, I know this question was for Gerald, but I'm going to put Jeffrey on the hotspot as well. What happens post-grant in Asellia Africa? How has the experience been? Have they gone on to successfully find financing, and have they been able to woo the likes of ABSA?
By all means. Thank you. Thank you so much, Eva, for that. Yeah, so what we've seen is, with the grants that, we've given to the agribusinesses, youth-led agribusinesses, women-owned businesses. What we've seen is they've been able to scale, their businesses in such a way that they've been able to move to being bankable. We've seen actually many of our banking partners actually getting to lend to them because they've built, their capacity significantly. Now, one of the things actually we also do, even as we, grant the agribusinesses grants, we also do technical assistance. We also have a component on technical assistance because we are keen on ensuring that they are able to appreciate, how to run their businesses, professionally, in such a way that, yes, even as, Daniel comes on board with the commercial lending, then the business has the ability and capacity to absorb those particular funds and deploy them properly so that ultimately they're able to grow. So what we've seen is for the last coming to 6 years that we've been operating in the various markets in Africa, we've seen actually our grantees, customers actually scaling and, are being able to grow. Some of them are progressing to large, SMEs and all that. So we've seen quite a bit of work happening, around this. Thank you. Over to you, Eva. Thank you.
Perfect. Thanks a lot. Right, so we have quite an interesting, a little bit involved question from David, which is how do we scale up these initiatives and structure them to be widely accessible to youth agripreneurs in rural settings? It's very evident that information asymmetry, that other structural barriers like road networks greatly hinder access to this agribusiness support initiatives. So what's your thoughts on that? So I think actually quite a lot of the digital innovation and the youth-led innovation can be often very sort of either based in cities or city-centric. And how do we get this into rural settings? So we'll go back to Jeffrey again. I'm just going to pick on you guys randomly to change it up.
Yeah, but by all means, actually, what we've done is we did, an analysis end of last year, and we noticed that actually most of our grantees and the grants that we'd given were largely in the urban, settings. So we became intentional around the banks that we're working with and the lending institutions we're working with to look at those particular lending institutions that support rural enterprises and their branches are located in those particular places. We increased the grants that we were giving and the guarantee that goes to those particular, areas and geographical locations. That's number one, to ensure that, yes, it is these innovations and digital agriculture is not just a preserve of the entities in the urban settings. We also ensure that those ones are also taken care of. That's number one. Number two, we also noticed that SMEs that are in the geographical areas like the northern part of Kenya, for example, where not much happens in terms of support that goes to enterprises that are in those areas. So what we did is we enhanced our grant position for entities and agribusiness customers and youth enterprises that operate in those particular markets by giving them an additional bonus to ensure that we are able to support them even much more. So we are keen on that in terms of reach and also ensuring that we support those entities that are in those places even much more. Thank you.
Perfect. Thanks. Okay, next I'll go to Daniel.
Yeah, so and that's a fantastic question. In my 4-pillar conversation, I spoke about access to information, access to coaching and mentorship, access to markets, and finally access to sustainable finance. Access to sustainable finance for me is the simplest to achieve because there's liquidity on one side and a pool of borrowers on the other side. But making them access that needs and requires us to be able to do the first three things, and on our own we are not able to have that reach, despite for example in Kenya having 87 branches and nearly 250 agents across the country. We still sort of rely on partnerships with the likes of Aseli to be able to meet the other pillars of access to information, access to markets, access to coaching and mentorship, to make them ready for commercial type lending. And what we've done, we've created a network of partners, some of them value chain based, some of them regional based, some of them specific to groups, either those living with disabilities or differently enabled, women and youth, to provide those first three pillars to be able to deliver them. The other thing that we continue to do effectively is use technology. Good thing with technology, it can transcend those barriers of infrastructural challenges of being able to move from point A to point B, especially for target groups that are a little bit enlightened and are able to attend virtual sessions. And also where we're not able to do virtual sessions, we've use technology that either helps with geotagging and disseminating the correct information to the right people. I'll give an example of what Safaricom does with its DigiFarm franchise, and it's able to disseminate information in the right way, not only for investor type businesses, but even for activities like agronomy support, vet support, where you need to access that information. So that has been the approach that we've been doing from an ABSA perspective.
Thank you. Okay, move to Gerald.
Yeah, thanks, Steve. I think my colleagues have mentioned quite some of the initiatives that I think I'll just reiterate and equally speak to what we do. But specific to what we do in terms of making sure that we reach those in the rural. So as I've mentioned earlier, GRP is a partnership of about 80 organizations across the world. Most of them actually have a boot on the ground in the very remote and rural areas in the global south, and we rely much on them in terms of disseminate this kind of information opportunities that we have, and making sure that some of within their network they work with are actually able to access this kind of information and be able to take advantage of that. And second, but I think most of what we do is actually we design a program, and in that case we call Innovation Challenge Funds within Global Resilience Partnership, whereby are specific tailored to a certain geographic sometimes, and not only targeting youth but also certain geographic. And for instance, Resilient Agriculture Innovation for Nature is mostly targeting rural entrepreneurs and organizations in East Africa, and it has been, and I think out of the sort of 60 businesses that we've worked with in the past 3 years, I think over 3/4 of them are actually coming from the rural setup and actually working directly with the smallholder farmers in the rural setting. We do also have a specific program which targets urban, not forgetting that urban also is quite very important, which we've launched, I think, sometimes this year, called RISE, Resilience in Urban Innovation, which targets, specific kind of group. We have a challenge fund which is being implemented in the Southeast Asia, in the Chittagong area, in the Hindu Kush Malay area, which is quite very remote and rural area. So we do this purposely in terms of making sure that we target both, not only targeting special group of people within the society, but also we ensure that areas that are mostly neglected or not reached oftenly are actually given opportunity to be able to be part of this kind of initiative and take advantage and benefits greatly in this. So I think that's to add on what my colleagues have mentioned in terms of using technology and something like that. We do also have this kind of initiative that we use to be able to reach more of the rural area, as my colleague had mentioned. Thank you, Eva.
Thanks, Gerald. Esther, what's over to you?
Yeah. So I will speak to Acumen's philosophy, which is enabling impact through commercial viability. So basically, when you invest in commercially viable businesses that work in agriculture, and agriculture we know happens in the rural areas, not in the urban areas, then you'll be able to enable impact upon smallholder farmers. So when you look at the Acumen Resilient Agriculture Fund, which is our fund, we've invested in 14 companies. And to date, we've impacted over 2 million farmers. And part of the impact metrics we touch on are the first time access. So was this your first time to access the particular product or service that is provided by the company that we've invested in? And for that, we see things above, or rather metrics above 75%. So these farmers had never come across such a service or such a product before the company started working with them. So in that sense, when we collectively invest, whether through grants, whether through loans, whether through commercial capital, in companies that work in a commercially viable way with farmers, then as a consequence, we will impact those farmers and will help them become better farmers. So in addition to what everyone has said, commercial viability in Acumen's and in my perspective is very important to achieve the impact that we want in agriculture.
Thank you so much, Esther. All right, we are just about finished. Thank you so much for staying engaged. Thank you to all the comments in the chat, and I will thank you, Daniel Munyambi, Esther Mwangi, Gerald David, and Jeffrey Namau. This was Investing in Youth-Led Digital Enterprises. See you after a short break. Bye, everyone.